We have a lot to get to on our final trade of the day. Joining me now is Tim Biggam of Options Insider, taking a look at this market, and we've had a lot of movement here.
About time, too. I mean, we were the most complacent the market has ever been up until the beginning of this past week, last Monday, but that all broke loose, and now we've seen volatility come back, so trading is certainly coming back, and I think some stocks are starting to look attractive here, given that big sell-off we saw in some of these names.
You say there are specific names to watch, and why is that? Did they have to do this rally that we've seen in the Trump trade?
Yeah, absolutely. That Trump trade has absolutely been derailed. Stocks like U.S. Steel, which was trading close to 40 not too long ago, now under 20. I like that name going forward. The banks, which were another big-time Trump trade on, Dodd-Frank repeal, rallied up big. Those cratered down as well. They're starting to look attractive here as well. So I like kind of those names, more value names over growth. I think the names like Amazon, Tesla, still to be avoided here. They've outperformed so greatly, kind of like value over growth going forward.
Let's zero in on the banks, because this has been one of the hottest sectors in the market. So people who purchased those stocks early on have been seeing nice returns on their money. Do they get out now, or do they hold and hope for another big bounce in the market to the upside?
I think the nice thing about the bank stocks here is you can kind of rely on that nice dividend yield to hold on here. So unlike some of those big growth names that I talked about to avoid that don't pay a dividend, most of the banks are yielding somewhere around 2.5%, 3%. Certainly you kind of get paid for going nowhere for a while. So I think add-on weakness on banks here, and certainly not a time to be getting out. I think we'll probably get a better chance to get out once that Trump kind of trade gets back on track here.
Thank you for coming on the show today.
Thanks, Ange.